If you live in Elkhart, Indiana, work in the RV industry, or just watch economic trends closely, this is the question worth asking right now. Is the RV industry heading toward another downturn? And does that mean a recession is coming? The short answer is that it's reasonable to expect a downturn in the RV industry soon. Not because of superstition or repeating dates, but because the economic conditions that historically trigger RV contractions are already in place in 2026. The RV industry is one of the most economically sensitive sectors in America. When the economy tightens, RVs are among the first things to get hit. RVs are discretionary purchases. They're financed. They're cyclical. And historically, RV shipments fall 6 to 18 months before official recessions. It happened before the 2008 recession. It happened before the 2020 recession. It happened again in 2022 and 2023 as the economy slowed. So when RV numbers start dropping, economists pay attention. Here are the warning signs showing up in 2026. First, the pandemic boom is still unwinding. RV shipments exploded in 2020 and 2021, then fell hard in 2022 and 2023. Industries rarely return to peak levels after a demand shock. They overshoot, then correct. That correction isn't finished. Second, interest rates are choking RV financing. Most RV buyers finance their purchase, and higher rates mean higher payments, fewer approvals, and slower sales. Dealers get stuck with inventory, manufacturers cut production. The same pattern seen in 2008 and again in 2022 and 2023. Third, consumer discretionary spending is weakening. Households are tightening budgets. Auto loan delinquencies are rising. Retail spending is slowing. Credit card balances are climbing. Consumer sentiment is dropping. These are classic pre-recession indicators. Fourth, RV downturns have historically preceded recessions. It's one of the most reliable early warning signals in the U.S. economy. When RV shipments fall, a recession often follows. Fifth, Elkhart is already showing early micro-signals. If you live in the RV capital of the world, you know the pattern. Overtime disappears, temp workers get cut, second shifts shrink, inventory piles up, and suppliers slow production. These local signals often show up months before the national data does. So will there be a recession? Economists don't use the word confident, but they do use phrases like elevated probability, high risk, and strong recessionary indicators. Based on the data, a downturn in the RV industry is more likely than not, and historically that has aligned with a broader economic slowdown. It's not guaranteed, but the risk is real, and it's rising. The RV industry has always been a canary in the coal mine. When it slows down, the economy usually follows. And in 2026, the conditions that typically lead to RV contractions, high rates, softening demand, weakening consumer spending, are already in place. If you're in the industry, watching the numbers, or planning ahead financially, this is a moment to pay attention. If this breakdown helped you understand what's coming, like it, share it, and subscribe for more clear-eyed looks at the economy.